Good evening friends, welcome back. So today we will try to solve a problem on hire purchase. What is the accounting to be made in the books of the hire purchaser? So let's get into a problem. So question number 3 is the subject matter of today's discussion. We'll go through the problem and then we'll try to solve it. On 1st of January X1, HP Messrs acquired a pickup van on hire purchase from FM Messrs. The terms of the contract were as follows. Cash price of the van is 1,40,000 to be paid on signing the contract, which is the cash down payment. The balance was to be paid in annual installments of 20,000 plus interest. Interest chargeable on the outstanding balance was 6% per annum. Depreciation at 10% per annum is to be written off using the straight line method. You are required to give journal entries and show the relevant accounts in the books of HP Messrs from 1st of Jan X1 to 31/12 X3 and show the relevant items in the balance sheet of the purchaser for the 3 years X1 to X3. So it is very clear, we need to pass journal entries, then prepare ledger accounts for the 3 years period and show the balance sheet for the 3 years. Okay. So these things are important. Cash price is given 1 lakh, down payment is 40,000. I think installment is given 20,000 plus interest and interest rate is 6%. So we'll try to solve it. I think we have captured the data here. But anyway, let me erase it first so that it becomes easy. Okay, what is the cash price of the asset? It is 1 lakh. Down payment is 40,000, which means the principal at the end of the year is 60,000, right? If I calculate 6% interest on 60,000, it is going to be 3,600. So the gross amount payable is 63,600, and now I'm going to pay 20,000 plus 3,600. So I'm going to pay 20,000 plus interest, which is 23,600, and the outstanding balance is going to be 40,000. On that 40,000, if I calculate the interest, it's going to be 2,400, and the total amount is 42,400. Again, if I start paying the installment, it is going to be 22,400, which is 20,000 plus 2,400, 22,400, and the outstanding balance works out to 20,000. Once this is 20,000, 1,200 is the interest, so amount payable is 21,200, and obviously you can actually start paying that amount also. It becomes 0. You see the total interest payable is 7,200, but for the year 1 interest is 3,600, year 2 is 2,400, and year 3 is 1,200. Keep these figures in mind because the accounting entries are important, and the numbers for those entries will flow from this table one. Right, so let's start with the accounting entries, the books of hire purchaser. What is the first entry? Hire purchaser will get the asset. So the entry he has to pass is pickup van account debit to hire vendor, right? Because he gets the asset and he will give a credit to the hire vendor. What is the price? The cash price of the asset, which is actually 1 lakh. Then second entry is for the down payment. What is the entry for down payment? Hire vendor to bank, which is 40,000. Okay, that is getting paid. Then end of the year, interest actually accrues for that 60,000 which we worked out, right? So 60,000 into 6% is 3,600. Our table already captured this amount. So we pass an entry for interest, which is interest account debit to hire vendor 3,600. Interest is an expenditure and we give a credit to the hire vendor because we owe him. Then we pay the installment, first installment, which is nothing but principal, the principal portion of 20,000 plus interest of 3,600, which is 23,600. Hire vendor to bank is 23,600. Since hire purchaser is using the asset, we pass the entry for depreciation. SLM basis 10%. So 1 lakh is the cash price. 10% of that is 10,000. So depreciation to pickup van is 10,000. Finally, we will transfer the depreciation and interest to the P&L account. Depreciation was 10,000. Interest was 3,600, and we'll say P&L account debit to depreciation to interest 13,600. So this will the entry for the first year. Moving on to the second year, obviously the first entry will be for interest because there is no asset acquisition or down payment in year 2. So directly we'll have the entry only for the interest accrual at the end of the year. The entry is interest account debit to hire vendor. We have already computed 2,400 was the entry. You can refer the table back. So interest account debit to hire vendor is 2,400. Then we'll pay the installment. It's again 22,400, 20,000 plus 2,400. Then depreciation for the second year, which is again 10,000, depreciation to asset, and finally we will transfer to the P&L account both depreciation and the interest. Right? So this will be the entries for the second year. Third year, similar entries are getting passed. Interest for third year is 1,200. Again, installment of 21,200, and then depreciation of 10,000. And finally, we will transfer to the P&L account both the depreciation and the interest. Okay. Once these entries are getting passed, we need to post them into the respective ledgers. Ledgers in the books of the hire purchase are the VAN account, pretty straightforward, just the ledger posting, right? So 1 lakh was the asset starting cash price. First year depreciation was 10,000, second year was 10,000, third year was 10,000, and finally you will be left with 70,000 as the price of the asset is left over. If you look at the hire vendor for all the 3 years, first entry you owe him 1 lakh, then interest accrued, then you paid 40,000. Look at the dates, 1st of January, the entry was 1 lakh, you paid him the down payment of 40, which means 60,000 still due, interest is 3,600, so, and then you pay a principal of 23,600 and final balance is 40,000. It's just the working which you already captured. Look at for the first year. First year the balance outstanding was 40,000. You can actually cross check with the table also. The table which we had, look at this. At the end of first year, after paying 23,600, 40,000 was the amount which is outstanding. The very same amount is getting captured in the ledger account also. Look at this. In the first year it's 40,000. Second year it's around 20,000, and finally we pay those amounts. Depreciation each year is 10,000, and we'll close that by a transfer to the P&L. Straightforward. Interest 3624 and 12, we will transfer that to P&L account. Right? Now, as regards the balance sheet for 3 years, look at the asset account. First year balance was 90, second year balance was 80, and third year balance was 70,000. How? First year was actually 1 lakh cash price. We wrote off depreciation 10,000, which means balance is 90. Another 10,000 for second year 80, and third year is 70. So this is from the asset perspective, 90, 80, and 70. From a liability perspective, the hire purchaser owes the hire vendor. So the amount payable to the hire vendor was 40,000 at the end of year 1, 20,000 at the end of year 2, and finally there is no liability which is remaining unpaid to the hire vendor. So there is no amount of liability shown in the balance sheet. It's only 40 and 20. So friends, these are the entries and the various ledger accounts which will get passed in the books of the hire purchaser. Okay. So just go through this again once again, and you might get a 6 marks question in the exam based on this. Okay. So I hope this video was useful, and I'll get back to you on another video where we pass entries in books of the hire vendor, and then moving further we will discuss about repossession also.